Hi everyone, let's go over my medium time frame and micro Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario, where we're looking for a three-wave structure to the downside, where preferably the end of the green wave Y is not yet in and we still find a little bit more downside. The reason why is that this wave X move to the left over here to this high makes this move a very short wave X compared to a longer wave W, and preferably this wave X will take a little bit longer as well, that you get a clear nice three-wave structure that also fits time. So therefore in this wave X I'm looking for two scenarios basically, either this being a expanding flat in a 335 like that, where the double top is an important target at 27.4k, or we have three waves finished, and then this is an expanding flat by itself for then a wave Y. So you then have a WXY, after which you then expect further downside. So this double top is definitely an area that I'm keeping my eye on at 27.45k. If you then look towards the downside, then I still have the yellow target box. Yes, it has been touched, but there are some other levels in this target box that haven't yet been touched, and this target area is between 24,850 and 24.3k. To the downside, just below the white target area, another target box between 22.6k and 21.8k. And the most common target area for this green wave Y is between the 0.618 and the 1.236. Between the 1-to-1 and the 1.236 is very common. So potentially another move towards the downside can result in price ending somewhere in this area as well. If we then go to the low time frame scenario that is matching what I just mentioned, so this is one of the scenarios, right? In the medium time frame scenario, we're still looking then for a WXY. And then if we go to the low time frame scenario, then this is one of the scenarios I'm looking at the moment, where we then have a WXY for eventually the finish green count. But inside this wave X, we then have a three wave in A, potentially B, and then a wave C. So this is one of the scenarios where if you pull the Fibonacci from the low to the high of A, you will see that this over here price bounced right inside the most common target area for a wave B, for then an impulsive structure towards the upside in a wave C. Now this might already be like, we could still get a fifth leg to the upside, or 5 legs are already in, and that is why I've also got still the alternative scenario of this being an A, B, C like this for then downside, and then you're not going to take the double top. But still, I think that double top as a minimum is very interesting, and we do have inside the most common target area for wave C two target boxes over here, one at the bottom, the bottom 1.618 around like 28k, 28.1k, and one at the highs between 28.9k and 29.2k. If we then go to the medium time frame, more bearish scenario, I mean, we still expect price moving to the downside. One could also argue this is maybe even a more bullish scenario, because we expect price to continue to higher prices, but then eventually you get that move to the downside. In this scenario, we still have then a WXY, but then the green wave X is not yet finished. So in the bearish scenario, the green wave X is finished over here. But in this scenario, this is only a wave A. So you then have a wave A, wave B, and then you're looking for an impulsive structure in a wave C to the upside. I like this scenario because this wave B here has been very nicely respected indeed, like perfect. If you zoom in for our chart, the 1.236 and the 1.38, most common target for a wave B, pulled from the low of W to the high of A, you can see it's very nicely respected. Some wicks below, which is absolutely fine, but on the 4 hour, all the candles closed inside this area, which is exactly what you want to see. And then price started to move to the upside impulsively, which fits this scenario. So this can still be an A, B, expanding flat, and then looking for a C to the upside, where there's two targets of interest basically. The point of control at 29.3k and the triple top, which is like, that is a main area of interest for me as well, around 30k. Like we have 3 highs over here that are untouched, and there must be some liquidity resting for maybe a liquidity grab and then a move towards the downside in that wave Y, which then has to be a 3-wave structure. And then we have to wait and see how low, of course, wave Y will go. I've just spoken about the target area of wave Y in the other scenario, where we also still have that target box as mentioned between like 22.6k and 21.9k, right? So this is definitely a scenario to keep in mind. If we go to the micro scenarios, switching to the lower time frames over here, it's been interesting, right? The weekend, of course, it's been rangy, but then eventually yesterday, last night, we saw that move towards the downside, and that's exactly what we were looking for. because mentioned in my previous video, I said, well, this can, and that is also an alternative at the moment, like this can be a 1, 2, 3, 4, and then a wave 5, right? But if this is a wave 4, then preferably I like to see another low. Why? Because if this by itself is wave 4 compared to this being a wave 2, then wave 4 was shorter in time compared to wave 2. In other words, wave 2 took longer to form than this being a wave 4. So I was like, well, I prefer price to come down once more, and then we can potentially move towards the upside to finish a wave 4, and then you get something like this. So 1, 2, 3, 4, and then you get wave 5, right? So this is something that we were looking for. And if you take a fib time from the high of 1 to the low of 2, and you put it then on the high of this wave 3 over here, then you can see that the 1-to-1 is the exact length of wave 2 compared to then a wave 4, but this low was made far on the left of the 1-to-1, so it was shorter than this wave 2, and I don't really like to see that. It's less common, let's say. So I was expecting another move to the downside, as mentioned in that video, which eventually happened last night as well. And of course there's two scenarios: either then, you know, this is 4 and you go up for 5, or this correction is part of potentially another structure, already a wave B or a potential wave 2, but it's not deep enough yet. So if this is a 5-wave move, 1, 2, 3, 4, 5, first of all, you'll notice that this wave 4 is shorter than this wave 2, which is again something I don't really usually like to see. And if we then take the Fibonacci's from the low 24.7k to then the high, you can see that only the 236 has been hit at the moment, which for a wave B or a wave 2 is not even a target at the moment. So you want to see price moving further to the downside to at least a 382, which is a common target for a wave B and a rare target for a wave 2. And for a wave 2, preferably, you want to see price going to the 0.5, which is at 25.8k. Now the invalidation that you see on the chart over here is for price being in a wave 4, because a wave 4 is not allowed to overlap a wave 1. So in both of these scenarios, what I'm basically saying is we're still looking for, as it stands now, a move to the upside, not yet at potentially this being a finished structure in a 1, 2, 3, 4 and then a wave 5. We still have that double top as well, right? Over here, 27.4k, very, very interesting area. And you see the word Discord actually, because I do think it's important to at least mention it, that I said over here in Discord yesterday in the YouTube Silver group, where I said in simpler words, it doesn't really make sense to me to already push up with the move that we have now from an Elliott Wave perspective. It makes much more sense to me that we would go down to at least once more below 26,430 before a push to the upside. So eventually, and that was like, price was over here, it was like slowly grinding to the upside, and I was like, well, it doesn't make sense to push to new highs, right? It doesn't. I prefer to see another move towards the downside, below at least this level, which happened, and then eventually a bit of a grind going below this week as well. And now we have to wait and see, of course, on the lower time frames, what's happening. Now, if I open my target boxes, then around the 0.5, we actually have some new support now. So we have a weekly naked point of control, and we have a weekly level between 25.9k and 26k. So if price continues to the downside, then at the 0.5, which also a target for wave 4, but also for then other scenarios, we have a bit of support over here, which is nice. And we also have a low at 26.1k over here, for maybe a liquidity grab. So if price is not yet finished with its move to the downside and it wants to continue, then this is an area of interest. It can, however, already be finished. So if I go to the lower time frames, it's a bit of a complex structure over here. And then either a WXY, where in wave Y we then have a ABC expanding flat type of scenario, or this is a W, and then this is the high of X, and then you get eventually a Y to the downside, like a 3-wave structure for at least taking the swing failure pattern, hitting the 382, which would be nice as well. Even for a wave 4, hitting the 382 is way more common than stopping at the 236 and then continuing to the upside. So it would be nice to have another low, but of course we have to wait and see. If we then finally have a look at the CVD divergences, they played out in this range very, very nicely once again. So we had some bullish divergences here, these played out. We had some some bullish divergences over here. These played out, and we had the bearish divergences, which initially got started to exist between this high and this high. So bearish divergences, lower high on price, higher high on the CVD. I'll show you in a second. And eventually these bearish divergences, of course, still existed when we made that new high. And then the target was this low, target taken. Very, very nice indeed. So again, like 3 CVD divergence setups in one range. They all played out over here. And over here, you then see the blue line, higher low in price, lower low in the CVD. Target is this high, target taken. Eventually, higher low in price, but then on the yellow line, which was absolutely minimal, you had a lower low on the CVD thanks to this little wick over here. Target this high, and then if I zoom out, you can see the yellow line was having bearish CVD divergences. So lower high over here in price, higher high on the yellow line, bearish CVD divergences, building up, but these now played out as we took this low as well. So that's actually pretty nice. And if we then look very, very locally on the 15-minute, there's not too much going on. I mean, you could argue there's some bearish divergences, lower high on price, higher high on the CVD, but you know, there's not too much structure yet that's been formed after initially these lows. So yeah, let's wait and see what happens for the next update that I share with you guys in a couple of hours at 1 p.m. Central East European time. But again, CVD being absolutely fantastic. I hope this video was helpful or valuable to you. Please check out the memberships and the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.